I'm Doris. I'm here to share with you about my stock account. Today, my stock account has made a loss of $120. The market is focused on the debt stocks. A rise in the debt and the Fed's favorite inflation measure raises the chances of a rate hike in June or July. So in my account today United Natural Gas made a loss of 1.78% to $6.64. Right now, the net asset of my account is $74,313.24. Today's market generally closed higher. Dow Jones Industrial Average closed 1% up, Nasdaq Composite closed up 2.19%, and S&P 500 closed up 1.30%. The industries generally closed higher, with the semiconductor closing up more than 4%, and the auto manufacturers and the software industry closing up more than 2%. The Dow fell 1% for the week, while the S&P 500 gained 0.31%. The Nasdaq rose to 2.51%, its fifth straight weekly gains. Markets are still closely watching the progress of the U.S. debt ceiling talks. The White House and the congressional negotiators on Friday were close to a compromise deal with a 2-year increase in the debt ceiling, according to media reports. The two sides have narrowed the differences in talks in recent days. Those who agreed details are tentative and a financial agreement remains pending, according to people familiar with the matter. U.S. House Speaker Kevin McCarthy left the Capitol on Thursday night, saying no deal has been reached, but the White House and McCarthy are close to a 2-year deal to raise the U.S. debt ceiling, sources said. The deal Biden and McCarthy are negotiating includes raising the U.S. government's $31.4 trillion debt ceiling and setting caps on many spending items, but exemptions for the military and the veterans. The proposed agreement will last for 2 years, but the final version has yet to be determined. Under the agreement, the government will increase discretionary spending on soldiers and veterans, with the non-Pentagon discretionary budget largely remaining at current levels. Anonymous sources said the White House is also considering reducing tax increases for high earners. The official said Biden has previously proposed raising taxes on people earning more than $400,000. Another source said IRS funding was a pending issue, but the key was to ensure executive president priorities. The move comes after Treasury Secretary Janet Yellen warned that the U.S. could default as early as June 1st. Today, the PCE price index rose 4.7% in April from a year earlier. Expectations of 4.6% and rose 0.4% month-on-month, beating expectations of 0.3%. U.S. durable goods ordered rose 1.1% month-on-month in April, and 1.0% expected. Analysts believe that Fed's core PCE inflation data priority beat expectations, while consumption remained hot, raising the chances of a rate hike at the next meeting. Traders stepped into the bets on Fed's rate hike after PCE data. Traders in Fed policy rates future contracts on Friday increased the bet that the Fed would continue raising interest rates after PCE data show U.S. inflation rose faster than expected last month. Implied yields on these contracts rose after the data, pricing the chance that the Fed raises its target range for the benchmark interest rates, currently 5% to 5.25%, at its June meeting about 60%. June future contracts earlier today show a roughly 60% chance that the Fed would not raise rates in June. After the PCE data, Cleveland Fed President Mester said the data confirmed that inflation remained too high. Tightening monetary policy is still affecting the economy. PCE data underlines the slow decline of inflation. The Fed's slow progress to reduce inflation is worrying. More disappointing inflation news could help persuade Fed policymakers to raise the rate again, providing ammunition to hawks believing further action is needed to restore price stability. The index climbed 4.4% in April from a year earlier after rising 4.2% year-on-year earlier. The core PCE index, excluding food and energy, rose 0.4% month-on-month and 4.7% year-on-year. Investors raised their bet on the rate hike next month more than 50% from 18% a week ago, reflecting recent hawkish Fed speeches and signs of economic strength. Friday's report showed price-adjusted consumer spending rose 0.5%, biggest increase since the start of this year. Treasury yields soared after the report. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.